The real estate market in Canada in 2021 was absolutely insane. And now that we're coming to the end of the year, that means it's time for my 2022 predictions. And this video is going to be focused on the Lower Mainland in BC as well as some other aspects of the Canadian real estate market. And you're going to want to make sure you stick around all the way till the end of the video because that's when I'm going to let you know where I think the best bet for investing is this next year. So let's get into it. What's going on, guys? Alex Dunbar here with the Dunbar Real Estate Group and Remax Treeline Realty based out of the Langley Cloverdale area. And in this video, I'm going to be going over my 2022 real estate predictions for the Lower Mainland. I'm going to be covering 5 categories today, which are prices, interest rates, sales, property types, and areas. So let's get right into it. In regards to prices, I believe they will be up by between 10 and 12% at the end of the year. Now, I don't believe this is going to happen at a gradual rate. I actually believe it's going to have a major spike in the beginning of the year, a bit of a plateau towards the middle, and then a bit of a correction or pullback towards the end of the year. So I actually believe prices may go up by as much as 20% before they come back down. Now, this is based on a variety of factors, but the primary ones being the incredibly low inventory, the incredibly high demand, the still very low interest rates, and the fact that we're still getting a ton of immigration. Now, although we don't have quite as much pent-up demand carrying over from December into January as we did last year, there is still a ton of demand and we're at record low inventory levels. So I pair the macro level statistical data that's out there right now with my ground level experience where I'm writing offers for clients at this point in time, and we're still seeing significant amounts of subject-free offers and multiple offers on all property types. So I believe the first few months of the year are going to be incredibly busy. We're going to have that spike in prices, and then sometime around June or July we'll have a bit of a plateau, hopefully get some more inventory, and then prices will stabilize or potentially even pull back a little bit. Moving on, let's talk about interest rates. Now, there's been a lot of buzz going on about rising interest rates and how many times they're going to rise and by how much they're going to rise, with some people saying they're going to go up by as many as 8 times in the next 2 years. And what we're specifically focused on is the Bank of Canada's overnight lending rate. So currently it's at 0.25%. Now, the primary concern here is that it's going to impact those with variable rate mortgages. So my personal prediction is that we're going to get 2 interest rate increases of 0.25% each for a total of 0.5%. It's most common that when the Bank of Canada does raise interest rates that it is only by 0.25%. However, this doesn't limit them to raising it by more. But again, these are my predictions. So I believe this is going to occur sometime in the middle of 2022. And the reason being is that they have to curb inflation. With the most recent announcement of inflation hitting 4.7% and many people speculating that it's actually probably higher, it's inevitable that we have to have interest rates rise. Now, for those that are concerned with the rising rates and potential increase in payments, that's why we brought in the stress test years ago. The reason being is that when you actually go to get your mortgage, you have to qualify as if the interest rate is at 5.25% to protect you from situations exactly like this. And for those that are concerned, I don't see any major rate increases in the near future. Moving on to the number of sales, I believe that we're going to see less sales than 2021. However, it's still going to be well above the 10-year average. One of the primary reasons being is that we're currently at record low inventory levels, the lowest they've ever been. What I do believe will happen though is over the next 6 months, we will gradually get more inventory, and paired with those rate hikes, I think we'll actually start to see a slowdown in the market. Moving on to property types, I believe that townhomes will be the hottest product for the start of the year, but condos will be the hottest to end. And as for the detached market, I believe it will be relatively strong throughout the year. Now, my reasoning for this is that the detached market in the past year has really gotten away from the average buyer. With prices increasing by more than 30% in several cities, it's becoming less and less attainable. Just to give you an example, in the Fraser Valley last year, condos were up by close to 22%, while townhomes were up closer to 29%, and detached homes were up 36%. Because of this, the gap between condo prices and detached prices has significantly rose, as it was previously around 59% and it's now around 64%, a 4.5% increase. Last year, you'd be looking at around $436,000 as the benchmark price for a condo in the Fraser Valley, whereas this year it's up around $530,000. In comparison, detached homes last year were around $1,061,000, and this year they're up at $1.448 million. Now, as this gap continues to increase, the lagging property type typically closes up that gap in the following year. Now, don't get me wrong, I don't think there's going to be any sort of ridiculous growth in the condo market. However, I do think they will have a very strong year, but it doesn't mean you're necessarily going to be able to make the jump straight into a detached home. And that's another reason why I think the townhome market has been so hot and will continue to into the beginning and middle of the next year. In reality, townhomes are really becoming the new norm for families, with detached prices just getting so carried away. And I think that's most apparent to those who are not yet in the market or who have just recently got in. And now on to my fifth and final prediction. This is my favorite one, where I'm gonna guess which area will appreciate by the most. Over this past year, the biggest increase in prices have been in the suburbs and out in the Fraser Valley. People have been moving away from Vancouver and getting more space. But now with the significant increase in prices, that gap between downtown and the suburbs is really starting to shrink. So for this reason, I believe the Fraser Valley will have an incredibly hot start to the year, but Vancouver will have the hotter finish. Now, what I do have to mention here, though, is that a lot of this is going to depend on what happens with the pandemic and restrictions and everything else. If we continue to have lockdowns and things of that nature imposed on us, people probably aren't going to want to move back to the city just quite yet. But as I previously mentioned, with the Fraser Valley having increases between 21 and 36%, depending on the property type, Vancouver was significantly less. They saw only a 12% increase in detached homes, 15% in townhomes, and 9% in condos. This actually puts Vancouver condos and detached homes only slightly above their peak in 2018. However, townhomes, on the other hand, have definitely seen the most growth. And now onto the moment you've all been waiting for. So in my opinion, in the Lower Mainland, the market that's going to appreciate by the most next year is, drumroll please, Mission. Now, I do want to specify that I primarily believe it's the detached market out there that's going to go up by the most. However, the city as a whole is definitely going to see some massive appreciation. And there's a couple reasons for this. Number one, there's tons of big developers buying a lot of land. And if you're smart, typically you want to follow where the money goes. These are people that make millions of dollars doing this for a living. So if they're able to see the future potential and they're banking on it, I would be as well. Reason number two is their transit system. If you're not familiar with it, they have the only commuter railway in Western Canada that's called the West Coast Express and takes you all the way from Mission to Waterfront downtown. And being that it's relatively the same distance as Abbotsford or Chilliwack, this makes it a bit more attractive for those who have to get into the downtown area. And reason number three is that it's still relatively small and affordable. Mission actually just recently crossed the $1 million mark for benchmark price of detached houses just last month. And with the majority of the comparable markets being well over that, people are going to be looking for where it's most affordable. I do want to state though that I believe Chilliwack and Maple Ridge will be close seconds. However, Maple Ridge actually has about a 20% higher price point than Mission does at this point in time, and Chilliwack is just slightly behind. But due to the flooding in Abbotsford and the insanely high increase in prices last year, I'm just not sure if it's quite going to have the same type of year. And that's about going to do it for my predictions today. So if you agree with what I had to say, smash that like button to let me know. And if you have a differing opinion, leave a comment and tell me what I got wrong and what you think it's going to be. And if you're interested in seeing more real estate videos like this, as well as community tours and everything else real estate related, I suggest that you subscribe to my channel. If you do have any questions or concerns, or you're thinking about buying or selling in the Fraser Valley, I'll leave my contact information down below. Don't hesitate to reach out, as I'd be more than happy to chat with you. So now comes the fun part. All we can do is wait and see what happens. Obviously, I don't have a crystal ball, so please do your own due diligence, and remember, these are just my opinions based off of the facts and my interpretation. Thanks so much for watching, and we'll see you in the next video.